questions from all of you here, but also from the audience who I know can see us, we can't see them, sitting in the University of Edinburgh, the students there, and they've put forward some questions that I'm going to go to first. So Alexandros Aristidou from the University of Edinburgh has asked, I guess it's kind of summarising many of the things in your speech, do cryptocurrencies undermine the bank's ability to regulate financial markets, or do they represent new opportunities?
Yeah, well, I listed many of the challenges with crypto assets, so I think I'll focus my answer on the opportunities. And I think the opportunities are that they point the way to where the system has to go to be able to enable these peer-to-peer transactions, distributed transactions, the first thing. And then secondly, they provide some of the underlying technology, or they provide an underlying technology that can be used in many of the solutions. And we're working hard. We've been working with DL technology, distributed ledger technology, for about 5 years. We are creating a system, the core of the system, in a way that private innovation can plug into the system more readily to provide these types of services that crypto assets are trying to do. And I think, as I said in the speech, one of the very positive things about this flurry of activity in crypto assets is they really are throwing down the gauntlet of where the system needs to go, what it needs to provide. And in that regard, they are creating a lot of opportunities.
This is you're sitting in the pub doing the instantaneous
sitting in the pub doing yes, I can't hide in the pub. I won't have the excuse of my usual, I left my wallet in my other coat excuse.
And another question from...
I'll have to say I left my phone in the other coat.
Well, actually, it sort of follows on from that a little bit. Kate Bradley from the University of Dundee. How does one reconcile the tension between your mandate to ensure stability, but also the great steps you have taken to support radical innovation in finance? How are you managing those two things?
Yeah, it's... I think we have to... There's certain bits of the core of the financial system that we have to protect. We have to maintain certain standards. So I'll take the example of RTGS, the system at the core. We did look at whether we could apply, actually run it on DL.
That's the real-time settlement.
The real-time settlement system, 600 billion pounds a day. You know, it has to meet standards of five Sigma standards. And DL is just not ready for that yet. With respect to financial institutions, so that's an example of how that's one side of the equation. With respect to financial institutions, whether it's banks, building societies, financial market infrastructure, there are ways to engage with that sector, provided you are taking the appropriate risk mitigants, provided they're meeting the standards of anti-money laundering, counterterrorism financing, provided you're reserving for the volatility, the extreme volatility you can see. I think last point I'd make is that part of the way you resolve the tension is actually you bring some of that ecosystem, in fact you bring that ecosystem into the regulatory net, into the tent, most of which is regulated by other authorities, so it's decisions for other authorities, but to the way I look at it, there's no reason why crypto exchanges should be outside the net. And one of the things that's being discovered, for example, with the regulation of the futures, is that there is then a view into the underlying exchanges. And not everything, this is a massive euphemism, meets the standards one would expect of markets in terms of...
Your reference to anarchy.
Anarchy, manipulation, and misconduct. And who suffers from that? That's the retail investor who gets brought into those. So bringing it in actually helps raise standards. Some will not be able to meet those standards and fall by the wayside. That's fair. Others will innovate in a way that rises to those levels. So I think that's how you resolve the tension.
As you know, there has been this sort of all men economists and even senior members of the bank have done their speeches about Bitcoin over the last few years. There's been a kind of standard conclusion, which is, don't look necessarily at Bitcoin, but the distributed ledger technology, that is interesting. That's something we're looking at. You said you've pursued it a bit. You're not sure it's ready yet. Is that one of those things that we sort of exaggerate the importance in the short run and then really miss the importance in the long run, that it's just going to be a 10, 20-year thing that transforms the financial system?
I think that's... You have to keep open that possibility, without question. And so part of what I was saying there and part of our attitude is think about always think about the end user. Think about the person in the pub or the business managing their supply chain. What are they trying to get from this new technology, or what problem is it trying to solve? How can the existing system adapt, even radically adapt, in order to provide it? In parallel, be all over the technology and expect that it's going to innovate, particularly if it's brought into the regulatory net, because the standards all of a sudden go way up and it has to innovate, and be aware that it can be moved. Now,
10 years, 20 years, it could be.
It's tough to say. It's also possible that it won't achieve that level. And I think one of the things that I would distinguish between the currencies, and this isn't universally true. I obviously won't name individual ones, but most currencies don't actually. There's nothing proprietary about the underlying. The technology will move beyond them. So if you own the currency, you don't really own the underlying application, if you follow. So you don't even have the option value on the technology, as you would if you owned a company that had an underlying technology.
Okay, there's a final question from the students, because I think it's a fun one. It's Gustav Birol from the Aberdeen Business School said, how did Bitcoin manage to transform the risk appetite of the average person who had been so wary of investing in the financial markets after the 2008 crash?
Well, couple of things. I think that one of the things in financial markets as a whole, and I think society, memory is, particular financial memory tends to be, kind of 7-8 years, and the sort of pain of previous experiences reduces. Certainly in professional financial markets, that's the case. Logically, it doesn't make sense, but that's what tends to happen. Secondly, I think a lot of the surge into these assets has been it's been a different generation, in part because it maps. They're trying to accomplish something with which that generation is quite familiar, right? So they're trying to solve an issue that they expect to be solved. So the investment case makes sense with the way they live. Okay, so and that generation doesn't have that memory of the crash. The crash. I mean, Sean, I don't know if you agree, but I know when I go to universities and things, you might as well be talking about the Great Depression when you talk about 2008. I mean, for me, it was yesterday, but it's a long time. It's still it's got it totally under control. So I think it's partly that some people didn't live through it. Some of it's the memory goes away, and then also some of it is a portion of people's. It's an option. It's a proportion of people. Small proportion of people's earning, wealth that they put in. Hopefully, and what you worry about, of course, and it's not our job to save people from themselves in this regard, but you worry about people who get caught up anytime you have extrapolative behavior, a bubble. It's the people who come in later, who come in with all of their net worth, who pay the heaviest price, unfortunately.
Okay, some questions from here. Front row.
Thank you for your presentation. Quick question on the regulation. So, how difficult do you think it would be to regulate parts of the cryptocurrencies, given that the technology is electronic, decentralized, and often anonymous?
Well, it's in terms of the exchanges, they're housed somewhere, they're powered somewhere. I mean, it's it kind of will. If there's a will, there's a way. It's actually relatively straightforward decision, and you see that the decisions that have been made in China, in Korea, in other jurisdictions, I would say it's relatively straightforward. First point. Second point is that, and there's a wide spectrum, as I suspect you appreciate, in terms of the underlying, but the anonymity, it's pseudo-anonymity in many cases. And one of the issues is the extent to which that pseudo-anonymity is unlocked and the chain is followed back, particularly with respect to illicit activities. So there's opportunity as well on that side.
Okay. I think you quote some of the. Do you basically buy the research that says it's anything from a quarter to a half of what's on these exchanges is actually related to illicit activity?
I think I would have. Short answer: don't know. Haven't audited it. Directionally, that probably was more true a year ago, before
all these young people.
Well, yeah, before the surge, because a series of people, coming in, but I think one of the issues is that there are still some, in many cases, there's quite concentrated holdings, and the possibility. So I'll be polite. The temptation for manipulation when you have a concentrated holding on an unregulated exchange is potentially very high, and I would put that in the camp of illicit activity.
Okay, there we go. Yeah,
I'm here.
Yeah, sorry.
Bill Schomburg from Reuters. Given the differing approaches
How do you like
among national regulators around the world, how quickly do you think you can see coordinated action at the FSB at G20 level on this issue?
I think it's a very good question. These are national issues. I suspect they will remain national issues for some time. I think that we will have good discussions at the G20 and at the FSB. As I think I flagged in my comments, most of the issues are actually not FSB issues. They're not financial stability issues. I don't want to prejudge the views of the FSB, but at least my view is that there aren't material financial stability risks. If you're a conduct regulator, though, or a market regulator, there are more material risks. And if you're the FATF and you're worried about money laundering and terrorist financing, there are more material risks. And so those bodies will have to work it out. But I would have a greater expectation for a series of national steps rather than some big coordinated approach. But again, it's not solely for me to decide, obviously.
Governor Carney, Ed Robinson with Bloomberg. You mentioned that exchanges should be brought into the regime that regulates the securities markets, the existing markets. But these exchanges trading crypto continue to grow, and many continue to remain offshore and seem to be intent on keeping that way. If they grow to a level that's quite sizable, one that would be worrisome to you and your counterparts, what actions would you endorse in reining them in, exerting some kind of control?
Well, it's. I think first you establish the principle, which again national authorities will need to do. But you see various ones of them moving in the direction. I'd make a legal point if I can, which is that in some cases the existing legal framework makes it difficult because they're not securities, and I just argued they're not money. There's something in between. Now that's a semantic issue. It might be a legally relevant semantic issue, but it's an issue. Authorities in those countries have to decide ultimately how to address them. But if you're a retail investor and the world moves towards, or major jurisdictions move towards, regulated exchanges for crypto assets, and you have a choice between going on a regulated exchange versus one that's offshore, that is more likely to be subject to manipulation, misconduct, cyber risk, operational heist. In the end, there's an element of caveat emptor, but also there's an element of the market I would expect move to the higher standard, as would the better crypto assets, and that's what you want because that's what drives better innovation, better service ultimately.
Any more? Come on, you've got the Governor of the Bank of England talking about the future of money. I'm sure you can... all right.
Hi, sorry, I'm over here. It's Nick Dimitri from Jones Day. You mentioned the advent of CBDCs or CBCCs, so central bank issued cryptocurrencies, and I wondered whether you thought that might actually have an effect on the liquidity of the crypto assets themselves, such that if there is, if there's fungibility, then the movement in between CBDCs and crypto assets would be much more fluid.
There's two sides. I don't think this is exactly what you were saying, but I'll make this comment, which is one of the considerations in creating a CBDC is that you potentially, at least in this environment, would skim off some of the intense interest in crypto assets, and so your currency would be less likely to reflect, the fundamental values that drive the currency, such as drive sterling, but would reflect, the new era, because it would be the safest way to be expressed in the new era. And so as a central bank, that's an entirely different element to the monetary policy transmission mechanism. And it's one of the reasons why, even if you can solve the technical issues and address, I do think you need to address the broader societal questions, not as a central bank, it's a society issue. You want to proceed in quite a deliberate way. Does it enhance the? Yeah, it would arguably. I think you would have both of those effects in terms of the exchange of which I think your core of your question, the crypto asset into the CBDC. But I think the use case for the CBDC would dominate that effect. So I think it would be a greater crowding out effect for the crypto asset, which is, again, to loop back, why you have to be careful not to sort of jump in to be down with the kids, as I said, and then end up with an overvalued currency as a consequence of being out there. And then the last point I'll make, if you try to address that issue by restricting the access to the CBDC, you potentially create an internal exchange rate between the sterling CBDC and other sterling, which isn't highly desirable either.
That was actually one of the questions from Hugh Rylands from the University of Edinburgh. Are you considering an initial coin offering for a central bank created cryptocurrency?
Wow.
To be up with in with the
that
kids.
Would be
or
well, look, it's no is the short answer.
Plastic, maybe.
But I think the question. I can understand why Hugh asked the question, and part of the issue is with time. If we go down the track, as we go in parallel down the track of pretty radical innovations at the core of the system, and then that the private sector takes advantage of, the kind I was talking in the speech. If we go down that track and it's reaching its natural end, and there's a bigger return from the CBDC, we want to be in a position, so, in a slight horse race, that if a CBDC ultimately made sense, that we would be able to implement it. And so he's right to challenge it. I don't think we would do it as an ICO, though.
At the limit, if you're giving every household in Britain the capacity to go to a safe asset in times of trouble, isn't the risk that they'll go to a safe asset in times of trouble?
You're absolutely right. That is, and my colleague Ben Broadbent made this point a couple of years ago in a speech, and it's one of the issues. So giving everybody an account at the Bank of England is not a desirable way of doing it, because they will just, in stress, you would logically switch everything out of your building society or bank into the Bank of England to be absolutely.
The queues going into the bank are bad enough as it is.
Well, we're working on that. We're working on that. But the other side of it, Stephanie, is that let's say we solve that issue through a token-based one. Then potentially we've disintermediated the banks relative to the very large amount of distributed money out there. Then we have a huge balance sheet and asset side of the balance sheet. Well, do you really want me making the first decision, or me or somebody like me, making the first decision of credit allocation in the economy? So where do we put that money? Do we just give it to the government? Cue my remarks about the Reichsbank. Do we make a decision about credit allocation? Again, not ideal. So there are lots of, not just practical issues, like technical issues. There are a lot of fundamental issues around with the design.
Thank you very much, Governor. I think that's probably all we have time for, and I will just comment on the fact that we have provided you with even very well-behaved journalists who didn't try and turn this into a question about anything else.
The other B.
Yes. All right, but thank you very much, and thanks to the University of Edinburgh for sort of hosting this, and otherwise Bloomberg and Bloomberg Economics, which I run, was very happy to have you.
Thank you very much, Stephanie, and thank you.